Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.5% there. On the S&P Nasdaq is red along with the semiconductor Dow. Made a little move there, 0.4% positive. Russell 2000 similar along with the transport. Banks made a move along with the energy. Biotech is down about 1.4%. Healthcare 0.5% positive. Home builders down, utilities up, retail is down, emerging markets down. Gold, Bitcoin is down, gold, silver, miners down. Gold, silver down, and the miners up a little bit. Dollar flat, oil up, treasury bond down, VIX is down a little bit. Let's do with the S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday, and looks like we saw that slight gap up on that first hour. A little bit of fluctuation, fill that up gap quickly there, but looks like on that first hour we did make a little bit of push. On the second hour got rejected, came back down, and when we did see that decline on the second hour, guess what? My horizontal pivot, which we talked about yesterday, coinciding with my micro-term moving average in that vicinity. And it's kind of like a micro-term double support there, right? Prior resistance acting as new support, also coinciding with my micro-term moving average. So on that third hour, looks like we threw that kind of a little spinning top candle there. And then we marched higher, fourth, fifth, sixth. A little bit of fluctuations on the 6th hour. Long lower wick here. Came right down to that micro-term moving average. Then when we did see that decline on the last hour, bulls brought it right back up here. We did slightly closed above that micro pivot there with that hammer candle. And so sentiment is still bullish. Bulls are still keeping up with that momentum, right? We talked about how they'll find the maximum efficiency to get up and feel that at least go up and retest that down gap at 460. Remember, we also talked about that big bears. The boss bear is hanging out here. All the little bears are dead after this move, but the big bear, the boss bear, is residing right here. And the bulls are slowly getting there, strategizing as they march higher, training themselves to get up there to battle with that down gap at 460. So what we need to do is we need to continue to give benefit of the doubt to the buyers, because this momentum we cannot ignore, right? This is a much bigger momentum than this one. We even saw bearish divergence that didn't even play out, right? So we must respect the fact that bulls are fully utilizing this momentum and the short micro-term moving average. Only way bears can bring it down right now is just some sort of a miracle gap down or shenanigans. Should there be any kind of decline going into early next week, I'll give you 448.50 as a micro-term support. If there's going to be more decline, if bears really desire to kind of make it pretty bloody on Monday, well, we got 443.80 there as a secondary support. We have the gap right on that vicinity, and also my short-term moving average haven't been retested since mid-month of March. So we haven't even retested my short-term moving average. Before, that short-term moving average was just like bears were just toying with that short-term moving average. Now it's like bears can't even get to it because the short-term moving average has been very aggressively rising higher, and looks like bears are a little bit scared of that short-term moving average because they realized last time they came down and faced that short-term moving average, well, things became very, very extremely hectic for the bears. So 448.51, 443.80 are the levels for the should there be any kind of shenanigans or decline early next week. Let's check out that oscillator and see if we can extract any more information. So we are back at that resistance level. We've been talking about how bulls are running on empty right about here, right? And bulls are continuing to make that move, creating space so that they can keep pushing higher. They realize there's no more real estate once they hit that ceiling. So what they did was these little pullbacks were there so they can create just enough space to push that price higher to attack 460. They're not too far away from 460 now, right? Just a couple of weeks ago, it seems like going to 460, it might take, I don't know, eternity. Now we're just right there. Bulls can see the boss bears. They want to go and battle the boss bear because bulls want to hit that new all-time highs. And boss bears know that bulls are coming. So they're doing whatever they need to do, strategize to defeat the bulls. Right now, that oscillator is right on that resistance. So this is a level where bears could potentially bring it down because right on this resistance. And if we do see, let's say if we do see a decline on that oscillator on Monday. Let's say on Monday I do this analysis and then this is what we see. Let's just say, because this thing came down, right? That's a triple peak bearish divergence. And people think, oh, it's a triple PK? That must be extremely potent because it's a triple. Actually, when it comes to the market, these triple peaks is not as potent as like a clean, like peak to peak bearish divergence, actually, as far as a probability is concerned. So just because it's a triple P, because I made that name, doesn't mean it's actually stronger, right? And also it's all about the sentiment, the environment. So that bearish divergence will get you, if we do see it, if we do see it playing out, I think the worst case scenario for bulls, if we do see that bearish divergence, bears can probably push to maybe 443. If we do see that bearish divergence, 443, possibly even come down to retest at 440. That's, I think, the worst they can do. I don't think that bearish divergence will bring it all the way down to the lows. If the bears want to see retest of this low right here, we're talking 420s. You're going to need more than that. So again, trend cannot be established just couple days of move. Just keep in mind what bulls had to do before they can bring this up for a couple weeks straight. This is how bulls operate, ladies and gentlemen. You thought this was just nothing. No. This is what they are doing, keeping the price what? Sideways. Consolidate. They look for the right, I talked about this. They look for the right timing. You let the bulls hang around, especially when we're in a primary term uptrend. Buyers will find a way to make a move. That's why you must understand not only the short-term fluctuations, but the long-term fluctuations as well. Traders Club March promo will be expiring this Sunday. If you've been thinking about joining Traders Club and come trade with me here at Traders Club, this will be your chance to get in with discounted price. And this promo ends this Sunday. So this is promo for annual memberships. And so for the investor and the premier, not for the VIP. And there's a special link right here. You can click on that and you can go to sign up and save $1,000 for investor annual and $2,000 for premier annual. Again, this promo is for the annual memberships only. So obviously, as a member, what you will get is that you'll get access to all of my current holdings and any future accumulations, details of why and how long I'm going to be holding, where's the entry and the updates on it, and then also the exit level. And another thing that I think a lot of my members find that very, very helpful is these two items here. Macro trend analysis. Obviously, you'll get this with any membership tier. Macro trend analysis and market corrections guidance. Basically, macro trend analysis is I forecast for the next 5 to 10 years. So if you understand the primary and the long term and the secular and the macro, so if you understand the long-term scheme of things in this market, you're not going to be afraid with the short-term corrections along the way. And recently, as we know, we've been correcting a little bit in the market, about like 15% or so on the S&P, maybe 20%, 22% on the NASDAQ. So what we talked about during this correction with my market corrections guidance for the members is that here, I'm going to go through some of these charts here real quick so I can show you guys. So you can see this is a NASDAQ chart kind of giving you guys the overs. And this is kind of the chart that I'm not going to share on the videos or my Twitter feed. This is going to be only for the members. And you can see there's another, this is for the Russell 2000, some of the pivots and the long-term implications. This is long-term. Here's the S&P, I share from MS 436. Also, when this thing gapped down, pretty dramatically, that was what, like, about a couple of weeks ago or so, a month or something like that, when we saw that very dramatic gap down. Talked about with my members that probably going to be an exhaustion gap. Also, with my oscillator showing this signal, this is where probably the market is coming down to take all the stops out to impute fear before getting back up. So these kind of the guidance that you might find helpful in your own analysis. This is a NASDAQ also in your own analysis. This is at very near the lows here. Talking about some of the long-term pivoted areas that you want to not get so lost in the short-term scheme of things, but you want to focus on the longer term. So when you do that, this is an S&P 500. And again, that's at 420 on Spider, currently trading at 450. And it's talking about how some of these signals that come about. Again, this oscillator I did not share with you guys publicly. And there are several more oscillators that I only share with my members. You can see this in NASDAQ. And this was a NASDAQ was near the lows earlier, talked about, right? And that was that was shaping up to potentially seeing that move. There's a bullish candle there. And then right here, so you can see on the NASDAQ, continue made a move on that week. So this is, I think, the main thing a lot of people really appreciate with the membership, that you understand the long-term implication of this market. And then when there's a corrections, we're going to try to figure out where's a good level to maybe buy the dip. Where's a good level potentially market is going to reverse back up, right? And also, if you want to learn all this stuff, there's enough resources in my member area that you can kind of educate yourself. You can kind of learn all the technical analysis stuff. So you can also kind of put that into your own practice. And obviously, all these reports that I'm gonna put out for my members, and this is where I'm going to talk about all of my holdings. How are they doing? Where did I buy? What's the level that I might be buying more? And and stuff like that. So all my members are going to be completely in sync with my holdings and what I'm going to be buying. The long-term implication of the market. What are the current sentiment of this market? Are we kind of in the neutral zone? Are we bullish zone? Are we ready to reverse back up? What are the levels to accumulate more? What are the levels to maybe exit? What I hear from a lot of my members is that they have a hard time figuring out when to exit on a position, right? And some members tells me they have a hard time figuring out when is a good time because they always miss out, right? They're always so focused on maybe shorting the market when there's a little fluctuation that happens, then they miss out the lows and they forget to accumulate. And by the time they realize the market is reversed, well, now it's already all-time highs, and then now you're chasing mode. And once you start chasing the market, things get very difficult. So feel free to sign up and take advantage of this for yearly, annual memberships. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and we'll train next week.